Welcome everybody, and now we will discuss about ICDS 2, that is on valuation of inventory. This is similar to accounting standard 2 on inventory. So anyhow, let's understand what is ICDS 2 on valuation of inventory, what it says and what it has to offer for all of us. So let's discuss first. Hey, I want to start Amla juice manufacturing. It's a great idea, right? Because today people are becoming health conscious. So lot of sales of Amla juice is there. We can do global exports. So what I did, I set up the factory, everything ready. I went to the farms, purchased all the Amla. Then I put it in the production process. Then I made the juice. I packed it in bottles and then started selling. Now what I wanted to tell you, that when I purchased the amlas, that is raw materials. So it is basically held for the process of production. They are raw materials held for the process of production. Then when I put it into the production process, we call it as work in progress. If it is in the process of production, they are not held for production, they are in the process of production, then it is work in progress. And finally when the juice is ready and packed in bottles, we call it as finished goods. They are held for sale. Now this raw material, work in progress and finished goods are called as inventory. Now don't get confused between stock in trade and inventory. You may say, sir, inventory means stock in trade, what's there in it? No. Stock in trade is finished goods. And inventory includes raw materials, work in progress and finished goods, all the three. Inventory is a wider term. So we are going to discuss ICDS 2 on valuation of inventory. So inventory means raw material, work in progress and finished goods. Now this ICDS is not applicable in certain cases. Suppose example, I have started a real estate company and I am into the construction of buildings. So some buildings are partly complete, right? Then when some buildings are partly complete, we will use the word work in progress in relation to construction contracts. So for this, ICDS 2 not applicable. There is a separate ICDS on construction contracts. That's why work in progress in relation to construction contracts not covered here. Second thing, work in progress in relation to any other ICDS. Suppose example, you are constructing a plant and machinery. So if you are constructing plant and machinery and it is in the process, then it will be covered by tangible fixed assets related ICDS, right? So that's why we will not cover it here. So we did not cover two things here, work in progress under construction contracts, work in progress under any other ICDS. Clear? Very good. Shall we go to the third thing? Now what they said, that producers inventories, yeah, I am discussing the fourth one, don't worry. Producers inventory of livestock, so like hens are there, goats are there, right? Producers inventories of livestock, agriculture and forest produce, right? Bajra, jawar, maize, so these are all agricultural produce. Really, when India banned the export of wheat, IMS chief has to beg to Narendra Modi that please don't do such things. This is the power of New India. So basically what I am trying to tell you, that producers inventories of livestock like hens, cattle, agricultural produce and forest produce, like in forest we have rubber and many others, right? Then same way we have to little forward we have to go, that is mineral oils, iron ore and gases. Actually these are all valued on net realizable value basis. These are valued on what? Net realizable value. So whenever we sell all this, the sales price minus selling cost minus completion cost, processing cost, that way we get the net realizable value, and on that basis these are valued. That's why we will not apply this ICDS. Again repeating, producers inventories of livestock, agriculture and forest produce, mineral oils, iron ore and gases, these are valued on net realizable value, so will not cover under ICDS 2. Clear to all of you? Yes. Now we covered work in progress under construction contracts, work in progress under other ICDS. We covered producers inventories of livestock, agriculture and forest produce, mineral oils, ores and gases which are valued on net realizable value. Still two items are there which are not covered by this ICDS. One is shares, debentures and financial instruments held as stock in trade. Now suppose they are held as capital asset, then anyhow they are not covered here. But even if they are held as stock in trade, they are not covered, they want to say this. Now shares debentures is quite known to you. Then what is financial instruments? In simple language, they are basically deposit certificates. They are forward contracts or financial contracts, right? So this way we should understand options, derivatives, all that are there. Okay. So shares, debentures, right, financial instruments which are held as stock in trade are not covered by this ICDS. It is obvious if they are held as capital asset, not covered. But even if they are covered as stock in trade, then not covered under ICDS 2 on valuation of inventory. There should be no doubt in your mind about each and every point. That's what I am trying to discuss with you. Okay, chalo, great. So how many we covered? Work in progress under construction contract, work in progress under other ICDS, shares, debentures, financial instrument which are held as stock in trade. Then we discussed about the producers inventories of livestock, agriculture and forest produce. We discussed mineral oils, ores, gases which are valued on net realizable value basis, right? And last thing which I did not tell you, that machinery spares. Now generally machinery spares can be of two types, which are common machinery spares, common machinery spares which can be used for any asset for general purpose. They can be held as stock in trade here. They are inventories here. But that machinery spares which are used only for specific tangible fixed assets and their usage is irregular. Like some nuts and bolts are there which are used for only particular plant and machinery. They are not covered here. That's what they said. If there are some general loose tools, they are covered under ICDS 2. Clear? Yes. So 5 things are not covered which we remember now. Now how to value the inventory? They are common, right, in accounting, and here both are same. Cost or net realizable value, whichever is lower. Now somebody says that market value, no market value. It is under US accounting, they consider it as market value. In India or in UK, we consider cost or net realizable value, whichever is lower. Clear? Yes. Now what is cost, what is net realizable value, we will discuss now. First let us take net realizable value. Net realizable value means, I will tell you. Suppose I am making amla juices and selling in bottles. So I expect that people will be paying me 200 rupees per bottle. So this is what my estimated selling price is. But still some packing whacking is done left. So for it I may have to spend 20 rupees. So this 20 is estimated cost of completion. but for marketing I need some more extra money, like 30 rupees I need for marketing. So whatever estimated selling price, that is 200, minus this 20 estimated cost of completion, minus this estimated selling cost, right? Commission I have to pay to retailers, wholesalers, marketers, right? Brand endorsements, all that are estimated selling cost. That also should be reduced. So this way I will be considering the net realizable value. Now clear, right? Shall I go to the actual cost? What is cost? Big challenge. 4 items, please remember. By heart this with me, right? Don't try to postpone it after I listen, after I understand. All this is waste. You have to by heart now with me. So at cost, when I talk about here, I mean cost of purchase, I mean cost of services, I mean cost of conversion, I mean any other cost. So I said 4 things. Please remember: cost of purchase, cost of service, cost of conversion, and any other cost. Now all these 4, what is the purpose? To bring the inventory to the present location and condition. Now when I have to make the amla bottles, what I did, I had to do market survey, where I will get the proper amlas, what are the farms from where I can get. I have to do contracts with the farmers. I have to ensure that they don't use pesticides in making, right? Because I want to give healthy drinks, right? So basically I gave them formulas for making organic farming, and I had entered into contracts with them. So all these are required for making amla juices, correct? Then when the amla was made by the farmers, I purchased it, the purchase price. After purchasing, I have to use laborers to load that amla from the farms and bring to the factory place. Then unload here, again I have to use the laborers. Again for production of that I have to use labor force, right? Then electricity expenditure for it, right? Then packing expenditure, bottles expenditure. Then finally the amla bottles are ready for sale. So all this actually forms part of the actual cost. So I said the cost of purchase, cost of service, cost of conversion, and last I said that any other cost which will help in bringing the inventory to the present condition and location. Let's understand cost of purchase first. What is cost of purchase? Cost of purchase is basically the purchase price. So what I pay for amla to the farmers. Okay. Then as of now there is no GST. So there is no GST, no other taxes. Suppose example, somebody is into manufacturing some other things, like example garments industry. Then for purchasing the cotton, they may have to pay on that also there is no GST. So basically, uh, suppose electrical equipments I want to make. For that I have to purchase some electrical wires and all. On that GST is there. So what I basically want to say, the purchase price plus taxes. Suppose we import from foreign country, then customs duty. If there are some things like on which excise duty is there, like petroleum products are there, alcoholic products are there, right? So these taxes. So purchase price plus taxes. Clearly understood? Very good. Now, I have to also add any other expenditure, in relation to purchase. Suppose I have to do market service for it, I will include it, right? So basically cost of purchase includes all this. Now, I have to reduce some things. Suppose government gives me subsidy, I'll reduce it. Subsidy for sale of this material, definitely I'll reduce it. Then I have to also reduce any rebates I get in taxes, hmm? Any trade discount when I purchased, So any other similar item, like I will deduct from the cost of purchase the trade discount, the rebates, and any other benefits which I get relating to purchases, I will deduct it and I will arrive at the cost of purchase. Now come to the service cost. It's simply labor cost only. Like unloading I say, downloading I say, in the production process, simply direct labor I am talking about, and even indirect labor in the factory. Supervisor is also indirect labor. So supervisor salary also included. And any other attributable production overheads. Right? For labor, we may have to give some incentives, that also becomes cost of service, that are included. Right? Now come to the third thing, that is conversion. Now from raw material to finished goods, we may have to do some expenditure in relation to electricity, right? Uh, Machine time related expenditure, machine related expenditure which are actually incurred. So that are all included in the cost of conversion, right? So all fixed production overheads, all the variable production overheads which are attributable to the bringing the inventory to the present condition and location. Finally, other costs which will also help you in bringing the inventory to the production, present position, location or condition. Sometimes what happens, we have to make the packing attractive. So we may take consultations. So that consulting cost may be also be included here, right? Packing design charges may be included. Packing materials are there, that also should be included, right? It is not just the product is ready, right? Nobody will buy the product as it is. You should pack it in the best possible way to make the customer attracted to buy the product. Good product with bad packing will not be sold. Bad packing, good packing, bad product can be sold. So this is what the present status is. So anyhow, other cost I said packing. Okay, to bring the product to the present condition and location. Now, should we include interest and other borrowing cost? I don't know the answer. Even ICDS 2 on valuation of inventory don't know the answer. Then who knows the answer? ICDS on borrowing cost know the answer. Suppose if you have taken the loan, to purchase the inventory, then whatever interest you pay on the loan to purchase the inventory, that interest will be included in the cost of inventory, right? All other loans, like if you have taken loan for construction of factory building, for purchase of plant and machinery, no, that are not included here. But if you have taken the loan for purchase of raw materials, then interest on that is a part of cost of inventory. Clear? Very good. Now there are some related costs which I have to discuss with you, but they are not included in the cost of inventory. Are you ready to know? I am eager to teach. Let's start. Hey, abnormal amounts of wastage of materials, labor or other production overheads. Sometimes machine does not work. So machine has to be repaired. So when machine has to be repaired, during that time laborer will sit idle. So that is loss of labor time. Materials may be spoiled due to storage problem or any other problem, right? Other production overheads may be wasted. So any normal wastage is there. That normal wastage will form part of the cost of inventory, but abnormal wastage is not. That's why when we think about P&L account, especially costing P&L account, we debit it to P&L account. Our normal loss is debited to P&L account, yes or no? Yes, sir. Normal loss, did you see in P&L account? No, because it forms part of the cost of inventory. Are you clear? I feel you are clear. So abnormal. Then second one is storage actually. Hey, storage cost of finished goods, storage cost of finished goods is not included in the cost of inventory. But suppose storage of raw material, work in progress. Now it has to be stored for production, right? That is included in the cost of the inventory. But storage cost of finished goods not included in the cost. Okay, but raw material and work in progress storage will be included in the cost. Administrative cost, generally administrative may be of two types, right? Administration for accounting, finance, general management, they are not included here, but administration in relation to bringing the product to the present location and condition are included, right? Clear? Understood or not? Yes. Selling cost obviously not included. Clear? Selling cost is after production, right? After the finished goods are ready, right? So not included. Okay. What are the methods we follow? I'll tell you that there are three methods followed here. But let's come back to accounting first. In accounting, what we follow? We follow FIFO method, first in, first out, LIFO method, last in, first out. We follow weighted average method, simple average method, production hours method. There are so many base stock methods, so many are there. But in income tax, hey, please remember ICDS 2 is not accounting standard. It is inventory valuation for the purpose of income tax. Okay. So in income tax, only three methods allowed. What are they? Specific identification method, first in, first out method, and weighted average method. Clear? Chalo. What is specific identification method? Hey, I went to a Haldiram factory. Ah, wow, tasty gulab jamuns are made there. So when I went to the factory, I saw Khoa is used for processing and making the gulab jamuns. Even ghee is used. So when Khoa is used, it is used specifically for making gulab jamuns. So that Khoa is inventory because it's a raw material, correct? The ghee used is raw material. So these are specifically identifiable with a particular product that is making gulab jamuns. So specific identification method can be followed for valuing the inventory. Same is, I'll tell you, like plant and machinery is there. Now we have to use oil for the plant and machinery. Oiling is required. Now oiling is not for a particular plant and machinery, right? It is for all the plant and machinery. Now in Haldiram, not only gulab jamuns, they make mixture, Navratna mixture, Haldiram bhujia is there, which is very famous. Right? There are so many. So plant and machinery can be used for so many things, different plant and machinery, and oil can be used in so many plant and machineries. So it is not for oil that for making the smoother experience in using the plant and machinery. Oil is used. That is a general materials. So we will not consider it here, right? Only if any inventory is specifically identifiable with a particular product, then use specific identification method. Sir, but if it is not the case, then first in first out method is there, weighted average method is there, that method you can use, no problem. Sir, what are these? Array, you studied in costing. Why should I repeat here again? Right? Chalo, you study in costing, you just remember the names here. In exam, they will tell ICDS 2 valuation of inventory considers the method for valuing the inventory. One of the following is not a method. Then they will say specific identification, FIFO method, weighted average method, LIFO method. So you tell me what is it? Yes, LIFO method is not considered here. Simple average not considered here. Only three: specific identification, first in first out, and weighted covered under ICDS 2 on valuation of inventory for income tax purpose. Sir, can we change the method of accounting or valuation? The answer is no. Why should you change? Follow the same method, consistency will be there, reliability will be there, trust will be there, accounting can be done better way. So follow the same method on a regular basis. But sir, okay, I understand your concern. If there is a reasonable cause for change, then you can change, no problem. Only if there is a reasonable cause. Now what is reasonable cause? Did they tell you in ICDS 2? They did not. Then what is reasonable cause? Suppose example, two companies are amalgamating. One is following FIFO method, second is following weighted average method for inventory valuation. Now when the new company comes out after amalgamation, it cannot follow both the methods, right? So in that case, it is reasonable to change the method. Are you able to understand? Right? Like this, you should be able to satisfy the income tax officer that yes, this is reasonable cause for changing the method. If there is no such cause, please follow the same method over the periods. Now, we have really come to an end of the ICDS, but we do all these things. There are two things. One, you have the talent. Second, is you are able to showcase the talent. If you don't have talent, you will fail for sure. If you have talent but you don't showcase your talent, then also you will fail. Same way, you have to follow the methods for valuation of inventory, that is doing it, but also disclose it, right? Showcase it, right? So that's what I am telling. So what you have to showcase? Which accounting policy you followed for measuring the or valuing the inventory? Including the cost formula. What cost formula you followed? Whether it is FIFO, weighted average, or specific identification. With what you followed, you tell. You have to disclose in the income tax returns, right? Obviously, people who are subject to tax audit, they only will have to follow the ICDS. So you will be either using the ICDS, income tax return 2, income tax return 3, or you will be doing income tax return 5, 6, right? So in all the income tax returns, proper explanations are to be added with form number 3CB, 3CD, all that are there. Okay, you have to disclose the accounting policy which you adopted in valuing the inventory, including the accounting, the cost formula, and the carrying cost. What is the actual cost which we are showing in the for income tax purpose? And second thing, its classification based on the nature of person again, right? For the person, what is appropriate, you show accordingly. Now, is it person specific? The answer is yes. I'll tell you why. Suppose example, a partnership firm is into liquidation. Partnership firm is into dissolution, I should use the word. Liquidation word is used for company only. So partnership firm AOP BY is into dissolution. Then what the present ICDS says is that you follow net realizable value. You follow the net realizable value for valuing the inventory. But before 2016, 1st April 2016, Supreme Court in Shakti Trading Company case said you follow net realizable value or cost, whichever is lower. Again, the Shakti Trading Company case was relating to dissolution of firm AOPBI only. So dissolution of firm, let's take. So Supreme Court said that you have to follow the cost or NRV, whichever is lower. ICDS is saying that follow the net realizable value. What is right? Who is right? Don't worry, both are right. Before 1st April 2016, if the firm is dissolved, then follow Supreme Court judgment, that is cost or NRV, whichever is lower. If dissolution of firm is on or after 1st April 2016, then value it at net realizable value. Value it at net realizable value. This is how you should understand the ICDS and all the concepts. Let's meet in the third ICDS, okay, on construction.